We've got the next question on Yes Bank, which is a question from Meenu, who's writing in from Thiruvananthapuram. And she's bought at levels of 22 rupees per share. I do not know the quantum that she has bought. Oh, actually, she has shared. 405 shares have been bought. What are the prospects on the charts, though, Swati?
Alex, the view is a little bit cautious. Already we have seen a very sharp downfall from 29 to 17 odd levels, but depth is more there. I believe the stock may again retest its 16 or 15 levels downside, and thereafter we can witness some sort of a bounce back rally. But those bounce back rally will be short-lived because there is no major structural positive formation on the technical front. So the view is a little bit cautious to negative. If you're getting any rise towards to 22 or 23 levels, try to exit out this particular counter for the longer term. Apart from that, you can take a long positions into the SBI or Axis or HDFC Bank. Those counters are really doing very well compared to the Yes Bank.
Incidentally, B.V. Dulani, who is a retired banker, has bought Yes Bank at very elevated levels 5 years ago. So you can imagine what the price is. He's seen a considerable erosion in the value. Does he sell? See, it's a negative view on the technicals from what I've just heard, but Avinash, would you just book the loss or, I mean, hold it with the hope that at some point there'll be a recovery in value?
No, I think clearly, Alex, if you got stuck at the wrong price, then I think it makes sense to, correct your mistake and move on. Because, 5 years back, all of us agree that Yes Bank was trading at, extremely rich valuations. And today the stock has come up to a level where I think recovery of capital is now going to be a very difficult task. So I think, I would suggest that, if he could probably switch over to some other bank where possibly he could try and make up for his losses. I think although, at these levels, there's no major risk for Yes Bank, but I would say a Federal Bank or maybe an IDFC First Bank could be better bets, rather than pondering over a past mistake. It's always better to move on. So I think a switch to IDFC First or Federal Bank would be better.
All right, we've got an interesting question coming through on call. Shankar is calling us from Chennai. Shankar, good morning. And I almost cannot believe the buy price that you have on Butterfly Gandhimati. Can you tell us when you acquired this and what drew you to the stock at the time?
Sir, very good morning.
Good morning.
Actually, I bought the shares at 1996, 29 years back.
Okay.
But most of the time after my purchase, it will trade only around 5 to 10 rupees. Only 2009-10 it will reach it will reach the magic figures of 1,000 rupees.
Yes.
Then I watched the TTK Prestige and the Hawking Cookers. At that time, these shares are very limelight, and next 5 years, these shares goes to 5,000, 10,000 rupees. So I am expecting Butterfly also will fly up to the magic figure. But after the 2010, the last 15 years, it only traded to 600, 2,500, 1,000. So my investment is very, very less amount, only 6,000 rupees. So I am very waiting patiently.
Yes.
Now my question is, any chance Gandhimati Appliances goes up to 5,000, 10,000 in 5 years or 10 years time frame? Then my query is there only. Only.
I got your question. Thank you, Shankar, for asking that question. And you're asking whether Butterfly will fly to 5,000 levels in the next 5 years. Might be a too steep a target, but let me see what Avinash has to say. Avinash, 5 times growth over the next 5 years, not easy for a company like this, but he's done incredibly well on his purchase. He's spent just 6,000 rupees to buy 1,100 odd shares, and the stock is currently where it is right now, over 700 rupees.
No, I think, Alex, the investor has actually bought the share, probably at the right time. But, one mistake which normally all investors make is, the capital allocation call. And I think just buying 6 shares is something which is not going to really make a gigantic proportion in terms of...
Avinash, let me clarify. He's bought at 6 rupees per share, but he's bought 1,100 shares. So he's got a substantial quantity.
So I think then the answer would be Alex. I think he's bought it at a very low level and he's got a decent quantity. So I think that means that at least he should take out his initial capital and then make his remaining shares free of cost. I think over the next 5 years we really don't know how this company will perform. But yes, now it's been taken over by Crompton. It's a part of the Crompton family. So I think definitely longer term prospects appear to be good, but I think it makes a lot of sense in these kind of markets to actually take out his capital and make the rest of the investment free so that he doesn't have a headache to see the stock price every day. I think 5 years, he could make another 5 times his capital, but that would be entirely be his profits. So, that would be a better strategy according to me.
Okay. And just a follow-up quickly, because he mentioned your competitors in the space. Do they have better prospects? Would you say that you can take some money from this kind of appreciation that he's had and put some money into something like a TTK Prestige or something else?
Well, I think he can, but see, I think the alpha to be generated from these levels, Alex, would be a difficult kind of proposition because the level at which he has purchased, that kind of alpha, what he has earned in Butterfly, it may not be possible to earn in stocks like TTK. So, unless, he wants to take a call where he wants to compound his money of say 15-20% every year, he can allocate some funds to TTK. But I think, you can't compare returns from what he's made in Butterfly to what returns he'll make in TTK because the base level is high and the investment value obviously at the current level also is pretty high for TTK.